My name is Sandro Tiziani, and on behalf of Bellevue Asset Management and BB Biotech AG, I would like to welcome you to today's BB Biotech update call. When we had this call 1 year ago, I'm sure very few people expected such a demanding 2018. The rougher macro environment led to headwinds, innovative medical breakthroughs, and inclusion into the SMIM and the SPI in September helped us to a new all-time high at the beginning of October. Before, unfortunately, in Q4, the correction pushed us into a negative annual performance. Today, 3 months later, the world looks brighter again. The gigantic Celgene takeover at the start of the year, a positive JP Morgan conference, further M&A activities, and also rather constructive investor sentiment have pushed the share price back to 70 Swiss francs. I am delighted that we are once again able to introduce Dr. Daniel Koller as speaker this year. He holds a PhD in biochemistry, has been with BB Biotech for 15 years, and is now leading the management team since 2010. Before I hand over to Daniel, just one information, there is a chat function, so should you have any question, just text in the chat function and we will reply to you at the end of the presentation. Now, Daniel, the floor is yours.
Thanks a lot for the introduction and welcome from my side. I hope you have all access to the slides that you shall see, in which I will scroll through rather quickly because we have around half an hour presentation and then hopefully one or the other question at Q&A. Here we go. So you see we have the forward-looking statements on page 2, followed by a quick rundown of the agenda of today's presentation. A very quick intro, followed by a quick industry overview, and then I have picked one or the other example in terms of how do we invest into innovation, as well as outlining our investment strategy and close out with an outlook and the investment case that we think is obviously very compelling for BB Biotech. But let me start with facts team and one or the other slide on performance. On the fact side on page 5, as you see, BB Biotech obviously has a 25+ year track record. We are one of the leading biotech investors in the world with around 3.7 billion in assets by the end of February. And as Sandro already highlighted for us, obviously of importance was last September, the inclusion in the index. So next to the Euro Stoxx 600 and the Star Index, we're actually the #1 ranked, and we are very happy to be included as well in important Swiss benchmarks as such. And on the right-hand side, a couple of figures. The dividend was paid last week. At the same time, the board has confirmed that this dividend policy will continue. So for 2020, we're going to have a 5% yield once again that we will pay out then around the AGM in 2020. And last but not least, you see total expense ratio of 1.25. This is a combination of the management fee at 1.1 and the other 15 basis points being the additional fixed costs that we run as a company. Then on the board of directors page, on page number 6, there's actually one new representative to be highlighted. That's Thomas von Planta, who joined, I said 1 week ago when being elected to the board of directors. Dr. Hunziker for many years is now the chairman, and he's a big personal holder of BB Biotech as well, one of our top shareholders. Clive Meanwell, which you see there representing or on BB Biotech's board since 2003, very well connected into the US biotech industry and into obviously all what's going on in Wall Street, as well as obviously on Capitol Hill. And then Professor Klaus Strein, with his title indicating he has for now multiple decades actually led both at Roche, Boehringer Ingelheim, the clinical development of many, many projects, and brings an extreme broad background towards obviously the content we have in the portfolio. Then on the teams side, or on the page 7, the team I'm very happy and proud to lead, as I said, since 2010. And you see Felicia, Dallas, and Stephen, 3 of the PMs that work out of actually an East Coast office. Christian and Maurizio and myself on being the remaining team or part of the team that works out of Küsnacht, Zurich. And then we have 3 colleagues on the investor relations side, with Silvia and Maria Grazia in Zurich and Claude Mikkelsen in a UK office, as depicted at the top of the page. To the performance, Sandro highlighted that. I think very, very good and accurate in terms of obviously the year that started off positive. You see as well on the left-hand side the rolling 12-month base we had there an underperformance situation in the second half of 2018. Then obviously the correction came on top, and now we had a very strong rebound, driven obviously by content, by takeovers, by positive clinical trials, as well as obviously our portfolio on a short-term basis, quite positively outperforming once again. You see this reflected on the 3-year rolling, much better. Actually, that, as I said, the outperformance starts to crystallize quite substantially, and then on a 5-year basis even further. And there the share price obviously performing on top, given that we have come from a discount situation to now a mid-single digit premium situation as such. And as a team, we are obviously quite proud regarding what we see on page 9, both in terms of absolute and relative performance. On a compounded basis, we have reached our goal of the 15% return on investment. That's actually as well the forward guidance we give on a multi-year cycle as such. And in the bottom part, you see there it numbers, obviously on a multi-year reflection, how big of an outperformance you can achieve if obviously the stock selection and the investment strategy works well, as you see here depicted. With that, a few quick words on the industry, page 11, very quickly, because we have shown this slide for quite some time. It's actually one of the leading drivers of drug demand, or actually medical product demand in general, is obviously aging, and how this is correlated becomes very visible on the right-hand side, where on the x-axis you see age, and on the y-axis the percentage of people with disease in the different age group. And it's clear that the top 3, like arthritis, heart disease, and cancer, have a clear correlation. They start at different time points to go up very steeply. In contrast, you see, for example, asthma, which in contrast is a disease of the youth and kids. And unfortunately, we over time lose actually the efficiency of our immune system. That's, for example, a negative correlate to why, for example, cancer, on the other hand, goes up. So if you consider to overlay what you see on the left in terms of, the demographics with the right-hand side, it's clear that the demand is very steep to the upside. And all of this you see on page 12, very schematically depicted in this cartoon. The top part being obviously the major demand drivers. We could even go to the micro level and say, cancer or bacteria become resistant, so we need new innovation on a continuous rolling basis anyway. And then the bottom part you see actually obviously knowledge, personalized medicine, and then for us very important, that's why it's highlighted, and the new technologies like RNA, gene, and cell-based therapy, but obviously as well still the old technologies, leading to new products that have to go through regulatory bodies, and most importantly for many years now actually through obviously a rigorous healthcare access process, meaning in the US the PBMs and the insurance companies, and in Europe, or let's take Germany, NICWIC, and obviously on a country level different budget systems that then consider what the price point shall be versus obviously the patient population on top. Given the US being the most important market, you see there very small depicted top left, around $3.5 trillion now flow into the healthcare system on an annual basis. That's more than 17, almost 18% of the GDP. And as you probably all heard over the last couple of years, drug pricing has been often called out by politicians as the main bad actors in the market, driving the healthcare system to non-responsive or actually non-payable levels. But if you go into more detail on the right-hand side, you see that prescription drugs, and this is the manufacturing part, make up around 10% of this pie. So we think it's obviously not the total picture. Obviously, our industry has to be responsible as well. But here we think innovation is the key, actually defending mechanism that obviously better and more safe or safer drugs per se will be the only ones to actually ask for pricing power and on that front profitability for the future. Then going a bit more into, the nitty-gritties of what happened last year, as well as a little bit of a background in terms of revenue growth. Let me start on bullet number 1 on page 14. Last year has been an absolute record year with 59 new product approvals in the US. We've never seen such a high number. Almost half of these products come from the smaller biotech industry, around 40% from pharma, and around 10 plus minus % from spec pharma and generics companies who make up the rest. This will be for the future an important factor as well, why biotech will take overproportional growth, and by that obviously grow and take market share from the global branded and drug market as such. And you see this depicted in the middle. Column 2, actually, as said, the last 2-3 years we have seen a slowdown. This has been product and company specific, but on a rolling basis, we expect the biotech sector to grow in high single digits to low teens in percentage on a rolling revenue basis for the 3 to 4 year cycle per se, nevertheless. And last but not least, given the pressure from the large cap names, such as large pharma and large biotech, we have seen quite a lot of M&A activity over the last years. BB Biotech in 2016-17 had 2 deals, 2018 3, as we have disclosed. As Sandra outlined, 2019 started with a big bang, with Bristol Myers announcing a $90 billion takeover for Celgene, which nowadays looks almost like a done deal, given last Friday ISS and Glass Lewis voted in favor of the deal. So we assume on April 12th, the shareholders actually of Bristol Myers Squibb to vote for the transaction, which then will consummate most possibly in the third quarter and will lead to an initial nice cash injection into BB Biotech's portfolio as such. On another level, looking at actually not just revenue and growth and obviously products, but on that level actually on profitability, I see a 20 plus year history, or kind of like 30 years soon, plus a couple of years forward, which is consensus sell side view. And you see the first 15 plus minus years of BB Biotech's existence was in general accumulated investment or loss, but actually reverted in the mid-2000s and now is on a steep upward trajectory. You see as well that from 2015 to 17/18 we have seen somewhat of a dip. This is to the large degree actually the fault or to be blamed on Gilead, which obviously went from 0 to 20 billion in Hep C and then dropped off again to now 3 billion plus minus in revenues. And imagine the impact this has on the profitability, just A, on Gilead, but B, even on the sector. And then last but not least, one of the other larger cap profitable product launched company obviously has been taken over. So these numbers disappear on a forward basis. But nevertheless, you see in general the trend being obviously quite steep to the upside. We think not only the large cap biotechs will be profitable, but in the foreseeable future, you're going to see a large number actually of mid-cap companies to become sustainable profitable, which we think is a very positive for the sector. How to invest in the sector is described obviously very schematic on page 17. You see around 1,000 companies plus or even more than that listed, which is our universe. And we dissect this into our focus group, which is actually the companies that are developing drugs for certain disease areas which are of high interest. Out of these, we have a lot of these companies modeled out, but around 100 companies in the so-called candidate list, and then can hold or want to construct a portfolio between 20 and 35, 35 being for us a hard stop. And you will see later on in the detailed portfolio allocation, we are very close to this top number, and we want to stick to this. And as a team of 6, we can obviously, or we think we can make a differentiation for our clients by obviously the efforts we can build around and the know-how we have in idea generation due diligence. And then all the rest comes to play in terms of how we invest and monitor these. But I think that's nowadays industry standard. What are the major areas that we are interested in? It's obviously oncology. That's both immuno-oncology and the good old targeted medicines that we have. The orphan diseases, which means often rare genetic or monogenetic disorders, where it's very clearly defined what the problem is, even on a genetic level. You will see central nervous system disorder has become a very important end market for us. And last but not least, cardiovascular and metabolic disease, which we here pull together. And on the right-hand side, you see a couple of our portfolio holdings that are within the space. And then on page 19, and this is probably a bit newer for many of the listeners on the call, we don't only dissect the portfolio along, as I said, these different therapeutic areas, but as well the different technologies and modalities that we nowadays have at our hands to tackle diseases. You see in the middle top, the pills, the tablets. Often you have to take them once daily. They're almost exclusively built on chemical structures or chemical molecules that are included there. And you see the price tags reaching from cents to actually obviously very high price tags. We go to the middle where, drugs are active intermittently, so for weeks and months. These are normally the biologics, or the new field that we have quite a high exposure in our portfolio being the RNA-based therapies. Normally the price tag is already a couple of points higher. And then last but not least, a newer field is the once a year or even lifetime therapies that you have to take once, like, the cell-based therapies in oncology or hematology, and then gene therapy and gene editing approaches, which are even younger and earlier in development, but obviously of high interest for not only us, but the industry as well. But let me first and now walk you through a couple of examples, but let's start with actually a chemical structure, or actually a small molecule that in the end patients will take as a tablet. This is a disease very well described, cystic fibrosis. We know the patient population, that's very clearly defined because it's tested at birth. And you read there in the middle, for example, these patients are individualized even down to the genetic modification or mutation they have. And you read there, for example, 70% of the patient have one of these major driver mutations being F508 deletion. And what that means is, you see that depicted on the bottom right-hand side, in the genetic code of 3 billion nucleotides, you have actually 3 nucleotides missing, and that leads to the following problem that you see depicted on page 21. Let's start in the middle. We have there, as I said, a so-called chloride transport, or a protein that we have on actually the surface of epithelial cells. And these epithelial cells cover, for example, our lung, as well as our colon. And you see there these little cilia on the left-hand side that actually help to remove or push mucus forward. That's our natural defense mechanism, as well as to clean out, for example, our airways. And on the right-hand side, you see this quickly depicted that the CFTR channel doesn't work in these cystic fibrosis patients. That's why the mucus becomes very sticky and leads to a lot of problems. The major one being chronic infection actually in the lung, and these patients have normally a much shorter life expectancy than a normal human being as such. And what has Vertex done? Vertex has worked with small molecules, so with pills, and you read their potentiator and corrector actually on 2 levels. First of all, to help generate and produce more of the so-called CFTR protein. And on a second level, if the CFTR protein reaches the cell surface, to render this more functional so that it works better, even though it has a defect. And with that, actually, what they have achieved is what you see there on page, here's a page number missing, sorry for that, on page 23, or I can hardly read it. You see their control level. So as a CF patient, or actually here it's cell, has a very low level of this function, or in this functional assay in terms of activity. You see the second column there when we reach around 20 to 25% of normal function by the so-called dual tablets. And the good news is now Vertex has actually 2 new so-called triple combination molecules in late-stage clinical development. Both have achieved positive phase 3 readouts, and you almost reach actually normal level. And why is this important? Because you see on page 24, why Vertex is such actually a positive performer in our portfolio. The company has grown from a few $100 million to $3 billion in revenues. And thanks to triple sell-side expectation are that this company will grow to 7, 8, 9. Some people even have 10 billion of peak sales assumption. So an extreme positive trajectory in terms of obviously top-line growth for the foreseeable future. So this was an example of the past in terms of small molecules. I will show you now one or the other example of actually new technologies that we have built in the portfolio. You see here the whole history. I don't want to spend too much time on this, but what's clear is on page 25 is we have broadened, as said, the technology reach within our portfolio quite substantially over the last years. And a key technology for us now in the midst, obviously, of reality, because a lot of products are currently launched, are the so-called RNA-based therapy that you see described on page 26. That's a little biology excursion again. My apologies for this. But you see top left, the DNA, so the storage, so to speak, of genetic information that has to be stable all lifelong. And this needs a so-called transcription into a messenger RNA that's unstable, short-acting, that goes into the cell cytoplasm and is translated into proteins, or easier said, into function. And you see schematically depicted on the right-hand side two of these approaches, the so-called siRNA, for example, from an alnylam, or Ionis with an antisense oligonucleotide that are very simplistic. They're binding or they're blocking this messenger RNA actually to be active, to be translated. And let's call this a loss of function that they achieve. For example, if the body harmfully produces too much of a toxic protein, this is an easy technology to actually obviously block something. And one example that I want to highlight, it actually works a bit of the reverse, but nevertheless, let me try to explain this, is spinal muscular atrophy, a rare genetic disease where babies get born. They have a defect in the SMN1 gene. And what happens if you have a defect in the SMN1 gene is that your nerve fibers that reach from actually, obviously from the CNS into the muscle as such are defect. And what it means is obviously if your brain wants to signal that your muscles shall move, this signal will never reach actually the muscle and you won't have muscle response as such. The main problem is it's very severe and devastating disorder. If you have the most severe form of this, you have a baby born. It's after a couple of months visible to the mother and father that something is not normal because the baby doesn't start to move normally, will never be able to lift its head or roll on the belly or sit up and stand. And you see here in the extreme situation, I said the most severe form of this disease, after 10 months around half of the babies have unfortunately died, and around 20 months, it's a 90% plus minus mortality as such. And what has now Ionis achieved, and Biogen IDEC is distributing this as a product called Spinraza. And I want to go in detail here, but after actually a couple of injections, and you have to chronically dose these babies, you see there in column 2 or 3 the age, and then you have 2 columns where you see actually what kind of function these babies reach. And let's take, for example, the middle column where you see 3 copies of the SMN2. You see there after 50 months, 9 out of 9 of these babies can actually stand up and walk independently. Contrast this to a 90% mortality after 20 months untreated. You see obviously that the drug has an enormous effect, and that's why it's very successfully launched. It was launched late 2016 and expected in 2019 to sell around at $2.5 billion revenue run rate with a continued solid growth opportunity. Another example is, and that's the last bit detailed example, is gene therapy. Let me go back, and you see there bottom left a little cartoon. So if this is just boys, because on an X-linked disease, I know, you see there that you obviously have, as said, the MTM1 gene defect, and what it means in that context is not the nerve cells are damaged, but actually the muscle cells don't work. And these babies get born, often preterm. They have to be artificially ventilated for a very long time and have a very poor prognosis. And what you do here is you take genetic material, package this into viruses. Sounds a bit dangerous, but this is quite safe. You actually infuse these viruses into the body of the babies and they transfect the muscle cells. And what you see on the right-hand side is actually gain of function. This is an example of Audentes, still a smaller position, but we think similar to an Avexis and others, actually very, very successful and potentially very or easily approvable even with early data as such. And the last example, even more complex, and that's why I skip it here, is gene editing. You probably heard about these Chinese babies where, I said gene editing has happened. But we look at this because for some rare diseases, you cannot actually replace the defect by a piece of genetic material. You could actually very precisely, potentially actually correct the function. And that's obviously kind of like a blue sky scenario, longer term investment for us because it's early clinical days for these companies. But we have done the first investment with Sangamo, which you see top right there in our portfolio as such. And with that, let me move over quickly to the investment strategy that is depicted on page 32. This is our S-curve. Bottom left, the private equity, top right, big pharma. And as you can imagine, the red circle reflects where our investment scope is, where we think it's the most interesting one. When companies start to have actually proof of concept data, we start to invest. And then we follow these companies through their growth cycle in the long term and then divest as a closed-end fund and reinvest at the bottom part of the S-curve. The goal on a return on investment is 15% per annum. And if you reflect on this on one of the initial slides I've shown you, this is pretty much what we have achieved over the last 25 plus minus years. The portfolio is what you see on page 33. We have then a handful of so-called core holding. And the new thing for shareholders of BB Biotech is, and we announced this in the second half of last year, we have reshuffled the portfolio quite a bit, have reduced the large cap holdings in favor of the small and mids. And what you see there as top holdings like an Ionis, Insight, Neurocrine, etc., are actually mid cap 10 to 15 billion companies and not the really large biotech names that everybody knows in the space. And in the bottom part, typical for BB Biotech, you see the new investments where we start to carefully invest between 0.5% to max 2%, and then have these positions grow over time as such. The examples I want to skip here, you see depicted or described on page 34, Ionis, which we hold since October 2010, with an IRR clearly north of 30%, so extremely successful for us and our shareholders, as well as Neurocrine, which is another mid-cap that has launched 2 products very successfully, mostly Ingrezza and Orlissa being distributed by AbbVie as such. But this is well a mid-cap, still some volatility, but we think obviously has a very positive potential in terms of return for us for the foreseeable future. And more importantly for you on page 36 is the portfolio cut. On the left-hand side, you see orphan, oncology, and neuro making up around 3/4 of actually our exposure. And that's no coincidence because these are the key areas of due diligence and new investments. In the middle, you see $100 US exposure. And this is not 100% correct in terms of geographical split because we hold around 2.5–3% in Argenex, which is a Belgian company, but we trade the ADR in the US, and that's why it's $100% US equity portfolio. Such on the right-hand side, you see the split. Important in terms of short-term performance will be the dark red piece of the pie, the 5 to 30 billion, the larger mid-caps, and then the 35 plus minus percentage point, almost 40% of smaller caps. This is where we allocate actively in terms of new allocation. And to the outlook to close it out, on page 35, you see the clinical milestones. These, we call them out important clinical milestones because we think when we can check them off, we expect that within 12 to 18 months time from now, you shall expect, or we expect actually that these products will make it through registration and clinical projects and development candidates become real products. And that's what you find on page 39. For 2019, for example, you see there top right, Cabometyx got a line extension approval for hepatocellular carcinoma, very important for Exelixis. And then even more important for us, for Sage, actually the first product approved for postpartum depression, a product called Brexanolone. And you see there 10 plus minus more products that we expect throughout the remainder of 2019. And why are these products important for us? That we have a chronic filling of actually a pipeline in terms of product approval is what you see on page 40. There you see actually the in silicio back calculated revenue ownership from our portfolio as such. And I want not to go through the different medical indications that you see depicted at the lower part, but actually focus what you see there on a compound annual growth rate, which is clearly north of 20%. This is based on our internal assumptions, obviously, so I have to put there a disclaimer on it. But contrast this to around 10% industry growth and the 2 to 3% pharma revenue growth rate. This is one key element for us. Why or how do we think BB Biotech not only achieves obviously a positive absolute, but as well a relative performance against, for example, passive strategies and index-oriented products per se. And last but not least, let me close out before we hopefully come to one or the other question, if there are some. To close it out, on the sector side, you see that reflected here. We think there is an increasing and unbroken demand actually for effective and safe therapies. And I just mentioned, for example, cancer. Whoever has followed a cancer patient in his field knows often these therapies work for some time and then the cancer breaks through and you need the next layer of therapies. Same as for bacteria and many other disorders where actually you're not going to have a long-lasting effect. Second point is innovation, we think, is the only rationale how you can defend actually a strong pricing power for the industry. This will be the basis as well for obviously approvals and last but not least for our revenue growth trajectory that you have seen. And then the last bullet for the sector is we have seen 20, almost 30 years of very strong sector performance. We are actually from the dynamics within the industry absolutely convinced that for the foreseeable future this absolutely can hold, if not even improve. And then to the portfolio side, I have outlined to you, we have a 25 plus year track record. We think we have an attractive concentrated portfolio that gives investor easy access actually to a complex sector per se. And you heard me talk about that we have a balanced exposure, not just by therapeutic areas, but as well as drug modalities, as well as development stages within the portfolio set on the individual level. And last but not least, we have a capital structure which we run on top of BB Biotech, or actually a capital redistribution policy. The dividend I mentioned, this comes obviously as an outlier because BB Biotech per se is not dividend paying industry because it's obviously a high growth area. So we structure dividend for our shareholders that they benefit both from the capital appreciation as well as the dividend pay. And last but not least, we have there as a defense mechanism in case we would go from a small premium now to discount again, a share repurchase program open that can buy up to 5% of our outstanding shares per year. So this is a bit more technical, but with this, I thank you for your attention and for your time that you spend on the call. And let's see if there's one or the other question.
Thank you, Daniel. I'm surprised there is no question. So I think Daniel answered all your questions during the call. So thank you for dialing in. As always, we will send you the slides and the recording after the call. And if you have any questions going forward, just drop us an email or call us. Have a nice afternoon, morning, or evening, wherever you are in this world. See you soon. Bye.